Hello there. This is James, and you're watching the latest episode of Market Bytes webinar series. In today's little episode or little webinar, I'm doing what was requested, and that is an introduction to market sentiment, part one. Now, I must stress, okay, this is an introduction. I'm going to do it in parts because there's a lot of things to go through with market sentiment. There's a lot more to it than people think. So today, part one is just an introduction. I will do part two later down the line where I'll go into a lot more detail about certain things, about market sentiment and how you can read it, use it in your trading, and more importantly, understand it, because I truly believe that market sentiment is one of the most important aspects of trading to understand. I really do. Okay. I really do. I really consider it incredibly important. But anyway, before we begin, don't forget these little webinars, videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, let's start with the presentation. So, like I said, this is an introduction to market sentiment, part one. And I said this is just an introduction. Part two, I'll go into a lot more detail. So, anyway, first of all, I said, Sabine, you know this, I had to do a brief introduction about myself. Been in the financial services for over 20 years, was an IFA in the UK, when I specialized in mortgages and commercial financing. Entered trading arena back in 2006. So I've almost been in the trading industry for 20 years. I started off with gold, as you guys all know, because I love gold, where I traded proper gold options through Dubai Gold and Commodities Exchange. I worked for several very well-known brokers in my time as a as a portfolio manager and educator. And I've been in education for over 10 years. I'm a well-known public speaker, and I'm also a published writer. And as you both know, I am a gold bug. So today, like I say, is an introduction only. Today, we're going to talk a little bit, or do an introduction on market sentiment. Now, market sentiment is the overall attitude of investors towards a particular market or financial asset. It is, and I underline this, it is a crucial aspect of the financial markets, as it can influence price movements and, more importantly, create trends. Now, understanding market sentiment enables traders and investors and financial analysts like myself to anticipate market movements and make more informed decisions. As well as that, I'm adding in a little bit here as well as that, adding understanding market sentiment also enables you to understand what the story is, which is dominating the market or the market's mind. So it's very important to understand that. So what is market sentiment? Well, market sentiment basically reflects the emotion, feelings, okay, and perception of investors regarding a particular security or an asset or a market. It's typically driven by factors such as economic data, geopolitical events, corporate earnings, and broader financial trends. Now, some of the key drivers, if we look at economic indicators, which we've done fundamental analysis, we did it last week, so we obviously GDP growth, unemployment rates, inflation, and interest rates. These are things not only they're fundamental, but they're also, involved in driving market sentiment. I mean, for example, if we're seeing GDP growth slight decline, then the general feeling and market sentiment in the market is going to likely to be one of concern and one of pessimism. It can change someone's emotion, like we've seen today. Actually, we'll talk about that at the end in the Q&A. What we've seen with that today. So yeah, so these sort of things can indeed change and dictate, in some ways, market sentiment. But it's not just that. No, it's not just economic indicators. It's not fundamental analysis we're talking about. We're talking about fundamentals, not fundamental. We're talking about market sentiment. We have to look at the news and media influence. This is where, with market sentiment, you have to sort of stay on top with the news a little bit, what people are talking about. This is why I do my live shows every day, for example, because I talk about how the market is feeling. I talk a lot about market sentiment, what's driving the story. So we have to be aware of, news and media influences. Political developments, again, as well. You have to be aware of that. So say, for example, a change in government could make something very pessimistic, make the market very nervous or very optimistic. I can give you two prime examples of this right now. Okay, 2022. Okay, Boris Johnson resigned as Prime Minister in the UK, and he was taken over, or the new leader became Liz Truss. Okay, she announced that she was planning, with a new Chancellor of the Exchequer, to do a number of tax cuts. Now, the market knew, for one, the UK couldn't handle that. So the sentiment in the market changed dramatically. It became very nervous, very bearish, and the sterling tanked. It tanked because everybody got so nervous. As soon as she resigned and backed out, people thought, right, we're not going to go through that. So optimism returned to the market. We could look at a fresh new example right now, which is happening right now. When Donald Trump won the election back on the 5th of November, the market got a boost. Why? Because they thought, okay, we feel bullish. He's going to be less on regulation to free up investment, this and this and that. So they became optimistic and confident. So the market started to rise. It was called the Trump bump. Okay. Then as he took office and slowly, as the excitement grew off, markets started looking at little details like tariffs and things like that. And don't forget the tariffs, though 25% is taken for steel and aluminium for all the countries happen today, there hasn't really had an impact. But already the market's looking at it and going, this is a bad deal. Like the Liz Truss thing. Same thing what happened with the Liz Truss when she with tax breaks. Before she even did it, the market went, no, this is going to be bad. So they got nervous. We started seeing the sell-off. So this is the sort of things you need to be aware of. Global events. Conflict, for one. Again, I can give you another example happening right now. Okay, there is an opportunity, potentially, of Ukraine and Russia having a ceasefire. It's happening, or they're discussing it in KSA yesterday, and now the proposal's gone to Russia to see if they accept it. So obviously in Europe, because Europe's been greatly affected by the Ukraine-Russian conflict, their stocks are beginning having the boost because people are beginning to feel, again, optimistic. Again, the market's feeling optimistic. So it's giving it a bit of a boost on the off chance that indeed we'll see a ceasefire. Okay, because obviously during the conflict's not finished yet. We haven't got the ceasefire, but obviously when it started, it impacted Europe greatly because it was nervous about obviously all the economic repercussions of such an event. Now, on the odd chance we might get a ceasefire, there's optimism again. And the other thing, of course, is corporate announcements. That can be a big influence. Because say, for example, again, I can give you another example. If someone like Walmart, for example, produces their earnings report, okay, and their forecast for, say, 2025, if it's projecting tougher times, then the market gets nervous because it's projecting a forecast which is slightly negative. And at the same time, other retail brokers start getting affected because they're thinking if Walmart's affected, the likes of Target, Costco is going to be affected too. And as well as that, the whole retail market is going to be affected. So people then start getting nervous that it's going to affect the consumer market. So it changes the sentiment. If they came out with their announcement and say earnings is great, our forecast is going to be skyrocketing, then the market will go, okay, that's good news. We're feeling good. You see? So these are the sort of things which could affect market sentiment as well. There is a bit of technical analysis. Again, I'll do a lot more of this in part 2, and I'll show you on my charts live how to put these in. That's for next time. But, you know, technicals can do a little bit behind market sentiment. Personally, it's more emotion. But, yeah, you can use technicals, apart from one, actually, which is the last one here. That's something which we will talk about today. But, yeah, market trends and technical analysis can be used. Bullish and bearish trends. Obviously, if you're seeing a downtrend, then obviously the sentiment is negative. And it depends if it's a long-term trend as well. Moving averages and momentum indicators, they are both lagging type of indicators, but they can indicate the overall feeling in some ways of the market. And of course, then sentiment indexes. In particular, the VIX. This is what I want to talk about, VIX, the VIX, because that can be extremely important. Now, measuring market sentiment, there's several tools in which you can use to measure market sentiment, obviously. Now, VIX is the big one, in my opinion. That's the volatility index. Okay, it's also known as the fear index, and it can help measure market risk and investor sentiment, which is extremely important. I'll explain to you how it works in a moment. Now, you have the put-call ratio. Okay, a high ratio indicates bearish sentiment, with a low ratio suggests a bullish sentiment. Now, let me explain that a little bit more detail on what a put and call is. Okay, now we're talking about, these are related to options. Okay, the options I used to trade with gold. Now, there's two types of options you can buy. You buy a put option against an asset or on an asset when you think that asset is going down. And you buy a call asset, a call option, sorry, against an asset or on an asset when you think that asset is going up. Now, how you remember it is the old saying is, I called a girl up on a date and she put me down. Okay. Now, obviously with the ratio, if there is more people buying puts than buying calls, well, actually, yeah, more than buying calls, that's better. Then, of course, more people are nervous. More people believe that asset or the market's going down. Of course, if there's more people buying call options, they think there's more people believing the market's going up or that asset's going up. So again, so anyway, but we'll go over that in more detail. Bullish percentage index, BPI, again, it shows the percentage of stocks with bullish patterns. So the more stocks with bullish patterns, the better feeling the market has. Commitment of traders report. This I will go into a lot more detail on part 2, sorry. A lot more detail in part 2 on this, because I read this a lot. It's released once a week. Okay, it's a CFTC report, right? Commitment of traders report, released once a week, usually Thursday or Friday. And this is released by the Chicago Mercantile Exchange. Okay, and it's free. You get access to this. Okay, the market doesn't get overly excited when it's released. It's not like an NFP event or CPI event like we had today. It's not like that. But those looking at long-term positions or long-term trading, or those trying to ascertain market sentiment or the beginning of a change in market sentiment, this is extremely important. And like I said, I'm going to show you where to find it on the website, how to read the report, because it's quite a few numbers. I'll show you how to read it in part 2. So don't forget, this is just an introduction today. Okay, and the other thing to bear in mind is social media and news analysis. Now, I know there's AI-powered tools to analyze social media trends and news headlines. Now, what I do as an analyst, and what I do for Live Show, I'm constantly reading, watching, listening, ascertaining what's going on. I watch the markets 24 hours, Monday to Friday. The only time I have a break is really the weekend. But even then on Sunday, I'm looking at it. Okay. So I do this to get an idea of what the story is. Again, I'm always looking for the story. As I've said many times, the market tends to focus on one story at that time. It doesn't really talk about more than one. It's transfixed with one story. And then that story, you then need to determine, is this going to have a negative impact or a positive impact? So you need to understand it, understand what the story is and what it involves. Now, I just want to show you the VIX. Okay. Now, this is an asset which is tradable as well with some exchanges. Okay. And this is the volatility index against the S&P 500. Okay. And it's, like I mentioned, it's also known as the fear index. Okay. As the fear index. Now, here's the thing. When the market is bullish and optimistic, the S&P 500, which is what the market looks at to gauge how good things are, how well the economy is doing, how well the market is doing. Does look at the S&P. That's a major gauge. If the S&P is skyrocketing, then we have a bullish market. If it's not, we're in a bearish territory. But here's the thing. This is what the VIX also does, because what the VIX is based upon, okay, it bases its percentage on those investors buying puts against the S&P 500. Like I already mentioned, you buy a put option when you think something's going down. You buy a call option when you think an asset is going up. So if there's more people buying put options against the S&P 500, then the VIX will start to rise, indicating that the market is nervous. Because the VIX and the S&P go in completely or negatively correlated. So if the VIX starts to rise, it goes above around about the real panic levels is 35. Okay, like I say, this is what 27. So the VIX is rising. And if you look on your charts right now at the S&P, because we'll be on a big losing streak for a good 2 weeks now, nearly. And the VIX, you'll see it opposite. So when you see the VIX start to spike or start to move, you then know there's a lot of nervous investors out there, and we have risk-off market sentiment. And okay, the different types of market sentiment as well, because this is what it's all about. This is what it's all about, trying to engage. Okay, first of all, you have the bullish sentiment. This is when obviously there's optimism about rising prices, leading to obviously increased buying activity. Then you have bearish sentiment, pessimism about falling prices, leading to selling pressure. And then you have obviously neutral sentiment, which is basically a ranging market, when nobody has any strong directional market movement in particular. But the thing is, this is the whole thing about market sentiment. What really drives the market? It's the number of bulls and the number of bears in it. If there's more bears in the market, then obviously we're going to see the market under pressure. If there's more bulls in the market, then we're going to see the market take flight. So this is what's important about market sentiment, is really to identify how the market is feeling, and when we know how it's feeling, then we know if there's more bears or more bulls. More bulls, we might see a bullish market. More bears, we're likely to see a bearish market. Right, now, impact. Again, I've already done a few case studies already. We'll go through a couple more. Okay, impact of market sentiment on asset prices. Now, market sentiment can drive asset prices beyond their fundamental value. Remember I said in previous episodes, trading is about understanding the whole story. It's not just technical, not just fundamental, but it's also market sentiment. Because today, even if you have good positive fundamentals, if the overall feeling in the market is negative, it can still impact that asset. That's why you still need to understand it. Now, this can obviously lead to market bubbles as well, and crashes, to both. And investor psychology plays a really big role in this, in market cycles and things like that. A sentiment-driven trading can sometimes override rational decision-making. It's called the madness of crowds. And that's a different topic as well, but there's a way of engaging that. That's called the Elliott Wave theory, which I will do another course on that as well at the same time. Now, obviously, what's a couple of case studies. Again, we've already gone through the Liz Trust incident, the current Trump incident we're going through now, which is affecting market sentiment. Let's go through some other ones. Obviously, we had the dot-com bubble in 1999, 2000. Okay. Again, it wasn't based on fundamentals. This was based on pure irrational excitement of a new thing. And this led the dot-com bubble to rise, and then simply explode. Then, of course, you had the 2008 financial crisis, which had really bad negative sentiment. And we saw the market crashed with massive sell-offs. And finally, of course, market sentiment, COVID-19. We all went through that. We all went through lockdown. And that was extreme volatility driven by, for one, we were so uncertain. We couldn't leave the house. We didn't know what was going on. And economic shutdown, so many businesses shut down. So straight away, we got nervous. We got scared. The market became bearish. As soon as we let out again, though, we had a market rally because then we got optimistic again. So there's a couple of case studies. But I personally think Liz Trust and the Trump case is a perfect case now. Really now, what's the whole point? Well, like I say, I think it's very important. This is why I'm going to do two parts on this. This is just part one. But I think market sentiment is a key area to understand and read and keep up to date with, along with fundamentals and, of course, technicals as well. But how can investors use market sentiment? Well, okay, there's two ways they could use it in their decision making. Contrary investing, going against the prevailing sentiment, buying when the fear is high. Warren Buffett does this. When the market is nervous, he buys. But he's looking to buy at the dips and hope that, it's just fear at the moment. It's going to turn around. So he buys when the market is fearful. Momentum trading, where you follow the current trend and you go with the overall market sentiment. The market is bearish, you go with the market. If the market is bullish, you go with the market. Risk management. This way you can use sentimental analysis to hedge portfolios and adjust exposure. Again, you use this to obviously protect yourself and diversify at the same time. But in my opinion, it's not just those things. I think market sentiment is extremely important to understand. And you combine it with your fundamental analysis, you combine it with your technical analysis, you certainly combine it with your risk management, you combine it with your making sure you diversify your portfolio. Like I've said many times, Trading is just not knowing about one thing. It's knowing about the whole picture. So that's the important thing. So this is obviously where you guys can ask me questions if you have any, or say hi if you like to. My tea's gone cold now. Shame. Assad, do you have any questions, buddy? Sorry? Anybody? I knew Assad wouldn't let me down. Good man. Oh, both of you. Excellent. This is my favorite part, by the way. This is what I really enjoy when I do these little webinars or I do live shows is the interaction bit. It's always my favorite bit. This is what I enjoy the most. Okay, I said, apart from looking at news, what are the tools that you can use to screen the news to derive the conclusion about market sentiment? Like I say, like I say, you can use a couple of technical analysis tools like bull to bear ratios, which I'll go through part 2 with. Like I say, I'll go through a lot more depth. The main tools, in my opinion, okay, I really do keep on top of the news a lot. I do that for a living. I do the live shows, so I have to. But the real thing, I think the real good tool to ascertain the medium to long-term sentiment, how things are feeling, is the Commitment of Traders report and the VIX. Because what the Commitment of Traders report, and like I said, I'll go through this in a lot more detail in part 2. This is just basically walking you through the door. Okay. The Commitment of Traders report, like I say, comes from the Chicago Mercantile Exchange, totally free, totally accessible, comes out once a week. Okay. And this will show you the number of shorts and longs on a certain currency, commodity, or stock. But it doesn't just show you that, but it shows you who's buying it. Because there's two types of groups. Okay, there's commercial and there's speculators. Now, commercial are buying or selling the asset to hedge themselves because they actually physically need it. Whereas the speculators are speculating on the price or where they think it's going to go. And you can see and use it to ascertain, is their sentiment, or if the hedgers are buying more, then they're thinking the price is going to go up to hedge themselves. And speculators are selling more, then yeah. But I'll go through it in a lot more detail. It's really, really good. I love to do it. But that and bull to bear ratio, and obviously the VIX is a good one. Saeed, what do you think about the US stock markets? Been dipping for a while now, but gold is still in a accumulating phase. Okay, yeah. Well, look, let's just briefly what we talk about. Let's talk about what's happened in the last hour or so. For example, we did have the consumer price index, did we? Announced US consumer price index. Where it did come in at 2.8% versus 2.9% expected. Don't forget the previous reading was 3%. So before I came on, I'll have a quick look at it now and check it on my phone as we talk. Before we came on, obviously the market's got a bit of a boost on it for obvious reasons. The main reason being is that if inflation is coming down to a lower level, maybe the Fed will get off their hands and actually do something, i.e., decrease interest rates will give the market a bit of a boost. Because overall, the overall sentiment for the market is very bearish. Why? Because obviously the tariff fears and concerns, and we've had some very negative economic data over the last, not negative, but disappointing economic data over the past couple of weeks. So overall market sentiment is negative, but it does look like this CPI is giving it a bit of a boost for now. Let's just have a look, see where it is, what's happening with it. Give me a second. Great question, guys. As always, you too. You're on it. You're my boys. Okay, indices, futures, pre-market. Okay, they're opening. They should be opening now, actually. Okay, they've all opened in a bit of in the green at the moment. VIX is opened in the negative, obviously, because it goes the opposite direction to the S&P 500. But all the rest, all the Nasdaq, S&P 500, Dow is all opened in the green today. Let's have a look at the shares as well. See how we're looking at shares. Tesla's up a bit. It could only go one way after that sell-off the other day. Nvidia is up. Meta is up slightly. Amazon. Only Apple is down at the moment, but again, the market's only been open for 3 minutes. Alphabet is in the thingy. It's in the green as well. Currencies. Okay, sterling a little bit down, euro a little bit down. It's a teeny weeny bit of dollar strength, but not massively. I still think we've got a long way to go. In reference to gold, gold is holding behind 2,900, isn't it? So I think at the same time, I think people are getting ready. We're going to see a little bit of a sell-off. We're always going to have a bit for profit taking, but I think at some point we could potentially see gold get its groove back, so to speak. But great question, both great questions. As I said, I look at the VIX and I use it. COT is a great tool. We would love to learn it from you. I don't know how to read it. Not a problem. That's what I'm here for. Great question, Assad. Yes, that's what we'll do in part 2, because I'm not only will I tell you how to read it, I'll tell you where to find it, how to get it, and then how to read it and go through all the assets it has, because it is a great tool. It appears complicated. It appears a bit daunting. But here's the thing, even though it's advertised for their financial calendars, it's always on the financial calendars, and it is like medium, and it's low risk or low activity because the market doesn't pay attention to it. It's not like an NFP, which is an announcement. It takes a while to divide and look at it and keep an idea of what the changing mood is and then how to use it. But yeah, no problem. Consider we'll do that in part 2. We do love gold, though. Will you be seeing any more webinars on gold? We could do more webinars on gold. I do love gold myself, as you know. We can maybe pick a topic. Maybe we can do something on gold, as in the history of gold, and relate it to current circumstances and conditions, which can help you understand it as well. So yeah, good question. We could do something like that. Not a problem. Is there any other metals, though? How about silver? I mean, silver is gold's little brother. So silver is gold's little brother. So we could do something on silver at some point if somebody wanted to do something on silver. I know I talk about gold, and I know all of us here love gold. But we can always do something different on silver. Remember, guys, I'm always open for topics and ideas. Whatever you guys want me to discuss and just, have a conversation with you about, we can do together. So it's not just what I want to talk about, it's whatever you guys want to talk about, whatever you guys want to have an open discussion on or learn a bit more about. It's not a problem. The whole point of the Market Bites webinar series is that it's really free flowing. It's not just it's not an education course. I mean, it's education, yes, but it's more of an open forum communication type thing. Well, we talk about it. Okay, I obviously share with you what I know and my experience and explain things, and then we talk about it. It's not like a typical educational course you get, which are boring. Where you get somebody to go, oh, this is how you do it, and don't really explain it. We don't do that. This is what this course is about. It's about you know, building relations and making sure we all understand it, and then we can take that on a part of our traders, trading journey. That's the whole point of it. Okay, as Ed said, we love gold more. We all love gold more, mate. But we can do silver too. So I mean, it's been an amazing discussing in these webinars. So thank you for your time, dude. Thank you for your time. I really appreciate it. You don't understand, guys, how much I appreciate you guys coming along and having a chat with me. I really, really do. I really appreciate it. Anyway, before I go, are we going to do you want to do market sentiment part 2 next week? We're going to do COT report, etc. Do you want that next week? Let's have a show of hands. Yes, 100%. I said, brilliant. In that case, we're doing market sentiment part 2. Yes, of course. Brilliant. Excellent. In that case, that's what we're going to do next week. We're definitely doing market sentiment part 2. We're going to go into the COT. We'll discuss a couple of the other technical stuff you can use for market sentiment as well. And at the same time, you and I, the three of us, will have a chat about what's going on in the market. But anyway, there's no further questions, guys. Don't forget, I go live every day, of course, on YouTube around about 3 p.m. GMT. Sometimes 10 past, sometimes 3:15, depending on how long takes me to put the material together, do my research, and get it all ready. So I'll be going live again in probably just an hour and a half's time if you want to join me for that. Or spread the word, let other people know. Come and check out James's stuff. Come and meet James. He's very entertaining. You know what I mean? So, yeah. So don't forget, we've got that. Obviously, I've got to do the disclaimer, guys. So make sure you read that as well. It needs be, of course. But really, that's sort of leave me to say thank you so much for all your time, guys. As always, you're my loyal fan base. You're always here to support me, and I really, really, really appreciate it. I really do. And you always have great questions. You talk to me. You don't just leave me hanging when I'm just talking to nobody apart from myself, which is great. Which is really, really, really good. Really good. Asa's got another question. Excellent. Thank you so much. I love her. I love you guys too, guys. Anyway, guys, thank you so much. I really appreciate it. Don't forget, spread the word about these and spread the word about the live shows as well, if you want. And yeah, I'll see you again next week. And we'll be doing market sentiment part 2 with a particular focus on the COT report. Anyway, that leads me to say, don't forget, these little webinars, these little educational videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.